What is up, everybody? Welcome to the stream. This is the good old first live stream of 2026, so Happy New Year, everyone. For those that don't know, I'm Lance Breitstein. I was a star top trader at Trillium. I then went on to trade on my own. I now mentor 6, 7, and even 8-figure P&L traders per year. I will be featured in the next Market Wizards book, and I am here now live to help you with your trading. If you appreciate these sessions, I try and do them occasionally on Sundays. Please give a like, give a subscribe, and share this link with others. So I must always start this feed, according to my lawyers, with the disclaimers. And so as I now always say, I am not responsible for any losses. I am not responsible for any negative things that might happen to you. This is not trading advice. This is my perspective. I don't know why this won't maximize. There we go. And so ultimately, my views change minute to minute, second to second. I am just sharing my thoughts in the moment. This is for educational purposes only. I am not responsible if you get attacked by a flock of pelicans. This has been known to happen to many people. You always need pelican insurance, which I do have, so don't even try it, folks. So thank you. Disclaimers. I'm not responsible. Please be smart. Trade at your own risk. Thank you. Now let's dive into it. My voice is a little gone after a couple days of first an epic Indiana Hoosiers win. Then last night we had that super insane Bears win. Who would have thought that two teams from my own heart were going to have such great seasons? Amazing to see. So anytime we start a new year, I think it's so important for people to reflect on what they achieved last year and where they want to go. So right now, every trading year is about 250 days of trading days, plus or minus. How do you want to spend this blank canvas? At the end of 2026, where do you want to end up? Most people don't take the time to actually ask themselves that question. What are your priorities this year? If you achieve one thing this year, what is it that will make you happiest? What will get you closest to your goals? And if you have that in your mind right now, if you're visualizing that with me right now in this moment, what specific actions do you need to take as part of your day-to-day to end up achieving those goals? Then what I want you to do is encode those goals and those daily actions into your calendar. So if you're thinking, I want to increase my trading size by 100% this year, what you want to then do is recognize that to increase your trading size 100% in 2026, that is actually less than an 8% increase per month because it's going to compound over time. And then what you really need to do is make sure that week over week over week, you are very prudently and gradually increasing your trading size. Let's say that your goal might be to expand your playbook from maybe you've got 2 trades in your playbook and you want to double that to 4 trades. What daily actions will you need to take in 2026? Perhaps that might be something like, okay, each day at 4:30 p.m., I am going to do my chart review. I'm going to type up all the big movers. I'm going to type up all the really nice breakout charts, and I'm going to expand into a breakout playbook. I'm going to start scanning for stuff like SanDisk and say, okay, how can I spot more of these setups? And you will take daily action to make this happen. You will take daily action to backtest these setups and make sure there's efficacy. You will reverse engineer the really, really good charts from 2025. But nobody reaches their goals unintentionally, or almost never. I guess it could happen. And so most people work through the year, but the truth is, when they're trading, they are just a body in the seat. And when I was managing an office at Trillium and when I was working at Trillium, you saw so many traders that they would go to work, but their actual intention during the trading day was so much less. And you would see people just chilling on Netflix. You would see people spending the whole trading day on their phones. The amount of progress those people made versus those with intention that were trying to accomplish something each day was so different over time. And the analogy I like to give is if I go to the driving range and I hit 300 balls each day, that looks like I'm putting in a lot of work and I'm practicing a lot. At face value, it's true. But here's the issue. If I go to the range and I'm hitting the same 300 balls the same way, I'm not working on the weaknesses of my swing. I'm not practicing with intention. I'm just solidifying and creating muscle memory for all my bad habits. So I might marginally get better, but it's going to be at a fraction of the rate than if I actually did that with real intention. And so I want you to think of every day when you're trading, you're really going to that driving range each session with intention. And that's part of that daily report card. I've done videos on that. So if you've not seen my daily report card video, if you're not doing a daily report card, that is an essential practice you need to do in 2026. So now I want to jump in and start talking about some of the things I'm watching. And I even tweeted my monthly newsletter, but I made a comment about the metals. And that comment was the stocks that are breaking out and making the biggest, cleanest moves, those tend to be the stocks that keep on making the biggest moves. So if you were to ask me what I'm currently going to pay most attention to in 2026, that's the stocks and the products that have already been making big moves and breaking out. So top of my list, right off the bat, I'm paying attention to stuff like silver. I'm paying attention to stuff like silver. I'm paying attention to stuff like palladium. Although this chart, because this chart cracked so hard, the odds of this going back to highs seems infinitely less likely than something that didn't capitulate this hard. You know, like my confidence that this would make a lower high versus something like silver is much higher. You know, this silver, this did not capitulate as hard. This did not crack as hard. And sure enough, we're back in this upper decile of the range. You know, so silver, I'd be less confident has a top in than palladium. But all the metals complex, this was probably, I mean, at least according to my research for that newsletter, the metals made some of the biggest moves they ever have. So just as a result of that, these metals are going to be at the top of my watch list. Another thing that is going to be at the top of my watch list is going to be these memory names, like the SanDisk. Oh God, I've got the RAM issue again. Come on, Seabiscuit. I might really need to switch to TradingView. Okay, well, while this slowly loads, come on. While this slowly loads, so the other thing I'm going to pay attention to is, of course, stuff like SanDisk and the memory names. Those have been breaking out and making massive moves. I might need to restart this. Okay, folks. So stuff like SanDisk, and I even tweeted this, SanDisk was showing one of the best charts. Oh God, this is just going to be a mess. I really need this. Sorry, folks. I might need to capitulate and try and do TradingView. Oh God, then I have an account, but I'm on the wrong email. This could be fun. Okay. There we go. Okay. So the issue is these streams take up so much memory and so much bandwidth. So like it just, let's see if this is back now. So it just crushes all these other programs. Like even the TradingView is running super low. Let's see if this will go now. Okay. So these memory names, these were like, man, unbelievable moves in 2025. Look how boring SanDisk normally is. Like the memory space is generally so cyclical and so shitty, but now, because of the whole data center bull market, that has changed everything for these stocks. So for a stock like SanDisk to go up literally 7x, it's so crazy to think about, but it did it. And even now to start this new year, like I want to be focusing on stocks like this. It went 7x in 2025. We did a really big base in November, December, then we break out. So a stock like SanDisk, that's what you want to watch. You know, the Micron, this is what you want to keep an eye on. This didn't set up as well. And so one exercise I posed on Twitter is comparing the charts of these memory names. And I didn't get much participation. I think it was only people like Ted Zhang. But a really, really good exercise is to take these charts, STX, WDC, Micron, and SanDisk. And so when I type up those charts, I can immediately rank order these in my head. And I've been doing this so long that processing, it takes me seconds. So within seconds, I know what my 1, 2, 3, and 4 are, and I know exactly why. And that is because I've been doing exercises like this for 15 years now. And so I would urge you to do this exercise as much as you can. And you can do this with, oh my God, it's freezing again. Okay, folks, we're just going to go to TradingView. But even the TradingView is slow because I'm streaming so much. Maybe I'll need a new laptop, quite frankly. So stuff like silver, we can look at the 1-year chart of silver. Oh God, then the scaling with all this crap. And we can see where were the best breakouts on this. And we can look at silver and, man, God, that's a crazy chart to see what it's really done. Holy crap. We can also compare that to stuff like gold. And what I want you to do for some of these exercises, and this is like an exercise you just always do forever. And you look at all these different groupings of stocks, silver, gold, palladium, platinum, and you compare the different breakouts. And you won't know what is best and why, but then you reverse engineer. And you try and find out, like, okay, which ones broke out the best and why? And over time, that exercise becomes very, very powerful. So let me fix this a little bit. And so what you want to do is you want to do that for stuff like silver. You want to do that. You can even do this exercise for the memory names and stuff like this. And over time, you get a feel for why was this SanDisk such a really good daily breakout? Why was stuff like STX, this STX is probably my least favorite of the memory names. And sure enough, this STX ended up failing the hardest. Why is it that SanDisk worked the best? Why is it that this Micron was just kind of choppy and kind of already going? And you build this framework for how to view price action and analyze all this stuff. And so that's kind of what I would recommend people do to get and develop that chart pattern analysis. You can even do that for stocks like the mining stocks last year. These rare earth metal stocks like MP, these did some crazy moves. We even have this CRML coming back. And so what I would be analyzing is like, okay, something that mega capitulated like this, what are the odds that this breaks out again? I would tell you that my belief is quite low, and that as a result, when this stock starts to bounce again and make a drive, I'm going to be way more short biased on something like CRML than I'm going to be long biased on something like SanDisk breaking out. The same reason why I'm going to be long biased on something like if silver's able to break out versus that palladium chart. And so what you do over time is you build this framework for price action. What does a good consolidation look like? What does a bad consolidation look like? What does a good reversion look like? Why was this CRML and this USAR such an absolutely incredible reversal play? Get out of here, Wanda. And over time, you're then able to just build a whole framework of, oh my God, this really capitulated. This was a really big move. This was one of the most extended ones where this went over 100% in a matter of a couple weeks. And doing all of that then just builds this massive database. And so if you look at any good trader, really any good trader that I know that really built their own system and formulated all this, including my trainer, including people like Qualamagi, including people like Greg, all those people did so by just studying thousands and thousands of charts. And people want a shortcut to that, but there isn't. And what I would recommend doing is building that lens from two kind of big categories. What stocks are most likely to reverse and why? what stocks are most likely to continue and why. So obviously, people love some of the small caps. And why is it that, oh God, I'm messing this up. What ticker did I want? It was, what was the small cap ticker that was running? I'm going to botch this. But my point is, you're going to, why is it that like, okay, even why did this Tesla breakout fail here? And that curiosity is what's going to really, really help. Why did this Tesla breakout back here work so well? Why did it work less well here? What was another stock that broke out? I mean, okay, let's even type up some of these big names to just get sentiment. So, as many of you have seen on some of the live streams I've done, I'm always paying attention to what the broader market's doing. Okay, SPY is at highs. We've been consolidating, like we're at highs, but nothing like crazy strength. QQQ is still in the range. So how do I want to feel when the market is overall range bound? At least in the Qs, it's going to make me more cautious. What I am aware of, though, that's interesting is like, look how long on this chart that the NASDAQ has done a series of higher highs and higher lows. Higher low, higher low, higher low, higher low, higher low, higher low. This broke, but then we immediately reclaimed. And guess what? We're back to higher lows within this range. So some of the green lights I want to see for momentum on breakouts is, yes, the spiders are at highs, but I want to see the Qs breaking out and really with some strong momentum. Then if that starts happening, I'm going to be paying attention to all the big tech stocks. Like, look what this Apple's doing underneath the surface. That's not strength. This is really rolling over. Look at what stuff like NVIDIA is doing. We're just totally mid-range. We're way off from those highs. So if I had to describe how I feel sentiment-wise overall, I would say mildly bullish. Like big stuff, like even let's do Bitcoin. Bitcoin, which is, one risk proxy. Oh God, get out of here. One risk proxy is massively off of highs. And so all of that is going to color my belief and my biases. One good sign of speculation, which I think I absolutely just aced on that live stream from a month ago, was this MSTR. This never bounced. And rightfully, it really shouldn't, because it's trading roughly at equivalent to its NAV. And that's how markets should operate. Like right now, I would say there's decent rationality. A lot of the froth has been taken out of the market. Like MSTR is no longer at a premium. RGTI is just down over 50%. IonQ is down not quite 50%, but quite a bit. QBTS down close to 50%. And so a lot of the stuff that was super frothy has pulled back. The overall market, like I kind of suspected, stayed strong. And so we are in what I would call just like a healthy, mildly bullish environment. Then, of course, that's going to affect my biases on how I trade stuff. If there's a really good breakout setup, like SanDisk, I'm willing to trade that. If there's a mildly good breakout setup, I'm probably going to pass because we just don't have that much oomph to the overall market. Now, the stuff that absolutely got its ass kicked, like the CRML, the mega capitulations that are now ripping, this stuff, I'm going to be short biased in. If we were in some rip your face off market, I would be scared to short something like this. We're not in a rip your face off market right now. And I think a lot of the reasons why people get into trouble, two ways, is because they're not aware of that market context. So here's the two ways people get in trouble. We can be in a rip your face off market, and people will be shorting big moves into rip your face off market. That's way number one, that people miss the overall context of the market and get their face ripped off. Way number two is the context changes and we go from a really strong market to not, like we had in essentially October, November, and people are still playing the strong momentum. That's how people get hurt and give back a lot of their gains. And it's not an easy skill set to judge that momentum and those changes, but it is possible. It takes a high level of nuance, but it is trainable. Most things in the market are trainable. And we do that through observing, we do that through building awareness, and we do that also through journaling. And that came up in the chat before I formally started the stream. Someone noted that they're journaling, but they're not really noticing any changes. And what I would say is, you're not noticing any changes yet. A lot of that stuff, those micro observations and those subconscious intuition observations can take a lot of time. And this came up in this video I made on annual reviews. So intuition is useful only if that intuition is trained. And I think that's where people mess up. If you're an experienced trader, you can trust your intuition because your intuition has been trained to process the right subconscious nuances. And even still, it can deceive you, so you want to back it up with data. Almost always you want data, but sometimes we don't have data. Now here's the thing. If you're an untrained trader, your intuition, if you're a beginner, actually harms you. Markets are designed so that if you don't know what you're doing and you just listen to your base emotions and your base intuition, you are going to end up doing the wrong thing. What you're going to do is you're going to see the CRML chart, and you're going to say, oh my God, this CRML chart is back. And rather than buying it here when we break out of this range, you're going to buy it up here, thinking we're going to go back to $30 or we're going to go to $50. That is beginner's intuition. An experienced intuition says, oh wow, even potentially on day one, this showed strength, this showed an influx of volume, maybe this gets momentum, or it catches the breakout of this range. This is, the experienced trader is buying either here on day one or here on breakout day one, which is really day 3 of this move. Day 3 of the overall move is still a lot, And then the untrained people, they're buying here. The risk reward of buying here, dead smack in no man's land, of something that's capitulated like this, buying up here is awful expected value. Buying down here or breaking out of this range is probably good expected value. And with trained intuition, my intuition now tells me, oh wait, I want to consider buying here or here. And I know my intuition says I don't want to buy here, but that's only because I retrained it from doing the opposite. When I first started, my first year, I would be chasing after everything. And I would be too hesitant to buy here. I would be too hesitant to buy here. So I would wait for so much confirmation that by the time I did buy, the move was already over. And that's why, so many people get confused. Are you supposed to trust your intuition or not? A lot of experienced traders do so, and so beginners think monkey see, monkey do, but it does not work that way. And so that's one of the dangers of intuition. Okay, let me check chat real quick to see if there's any fun questions I can share. Okay, so I just saw this one comment from Tom. I bet Lance is good at poker. So I want to tell you all a funny story. And this goes way back to probably about a decade. And so many of you all might know the legendary Phil Helmuth. Phil Helmuth is one of the winningest poker players of all time. And Phil Helmuth, I don't know if he still does these, but he used to do a lot of charity poker events. And he did these poker events for the Children's Hospital of Philadelphia. Really great cause, big fan of all these charity events. And so Trillium would be a corporate sponsor of these charity events. And so sure enough, one year I end up getting the last minute nod and they say, hey Lance, can you, come represent Trillium and play in this poker game? And I say, sure, absolutely. And I had never done anything nice like this at the time. It was over a decade ago. And I was mostly there for the free drinks and the high-end buffet sushi and other stuff. I was there to eat and drink and have fun with my friends. And so I'm playing my poker game, and I wanted to catch up with everyone. And so I'm not really trying to win. And there's probably 200 plus people playing poker. And I end up starting to do well. And next thing I know, it's down to 4 tables. I'm still doing well. And now a lot of the rest of the Trillium group is cheering me on. The owner's there, the CEO's there. And meanwhile, at this event, Phil Helmuth is emceeing it. He's still playing. And there's other pro poker players. There's amateur poker players. It's awesome. And so then what ends up happening is, sure enough, I end up going to the final table. And that final table ends up being myself, Phil Helmuth, and one other poker player. And now there's a crowd of hundreds of people around us watching. And so I'm actually the big stack. And me, being the young, young buzzed trader guy that I was, I start talking shit to Phil Helmuth, and it is hysterical. So there's one hand where I think Phil has a really good hand, and he's trying to kind of go. Or no, I thought Phil was bluffing, and I'm like, oh Phil, I think you're bluffing, but I don't have a good enough hand to fight you on this. And so I ended up folding, and then he turned over his cards, and he's like, oh, you were right. I had 2-8. And so then in front of everyone, I was like, you know what, Phil, you're easier to read than a Dr. Seuss book. And everyone's just like, cracking up. It's all just a good time. Phil's being a champ about it. And so then like the very next hand, I end up with 2-7, and I end up bluffing Phil. And then I turn over my 2-7, and the crowd just goes absolutely apeshit. Everyone's loving this. And so long story short, I end up winning the whole tournament and the whole charity event. And what you end up seeing is I have pictures of me with like this big old trophy and Phil Helmuth, kind of hugging it out. And other fun story is Phil ended up on like this big sports podcast like a couple weeks later, and he was talking about his charity events. And the guy was like, oh, do you always win these charity events, or do you ever get your butt beat? And he's like, last week I was at one for the Children's Hospital of Philadelphia at the Mandarin Oriental, and yeah, man, it was just this young drunk hedge fund guy just beat me. It was awful. So that always cracked me up. So I don't actually think I'm good at poker, for the record, by the way, but I would say I'm a pretty average poker player. Maybe I could have gotten better at poker, but the poker lifestyle, like if you know pro poker players, it's a pretty tough world to live in, quite frankly. Like you work a lot of hours at the table, and it's a lot of travel, and it's not really my thing. So here's one other story I think is relevant and important that I wanted to share. So last week I was on the monthly review calls with S&B Capital, and 2025 was without a doubt a really, really great year. And when you work with a firm long enough, I've been working with S&B Capital and mentoring their traders for 4 years now. And some of those years are really, really, really tough. So you will see a lot of the traders, especially the younger traders, struggle. Most of the years, there's a lot of traders that struggle. And 2025 was a year where universally the S&B traders did exceptionally, exceptionally well. A lot of people had PR years. There are traders at S&B Capital that put up over $10 million. There are many traders that put up over $1 million. There are a lot of young guys that had their breakout year and put up 100K, 200K. And it's amazing to see. And so Bella said something during those monthly review calls that was so important. And people like Bella, who's been now coaching traders for over 20 years, he has the benefit of perspective. And what that perspective is that over time, there's going to be a lot of good years and there's going to be bad years. And we can't control whether there's good years and bad years. And what we inevitably see is during the good years, all the traders tend to get euphoric. They're doing well, they're making money, they're hitting their PRs. Then during the bad years, traders just get so down on themselves. And what they don't realize and don't have the perspective to see is that they're just kind of getting caught at the whim of these market cycles. And their happiness, their sense of self, how they view their career as a trader is all at the whim of whether it's a good year or a bad year for the market. And that ends up being very defeating for them, because in the good years, they ride that high a little bit too much and often then don't hunker down if it's a slower year. And let me tell you this, if I were a betting man, the odds statistically that 2026 is far slower than 2025 is very high. And in fact, I would say we've even kind of seen that in December already. Like December was a really tough month. I don't think January's off to some crazy start. And so you will get these guys that ride this emotional high, and then when the market changes, they're not ready for that change. They're thinking they're always, P&L is going to grow, when it's not about the P&L growth. And this actually happened to Kenny, one of S&B's top traders, in 2021 into 2022. he's always pushing to be his best trader. And so he wanted to see continuous growth. Then when 2022 offered less opportunities, he ended up anchoring to that and got himself into a lot of trouble. And so Bella made this great comment that like it's so important to take that step back and recognize that 2025 was a really good year. And if you did well, that may or may not continue in 2026. But the more important thing is while the market is going like this and you have good years and bad years, good years and bad years, what you really want to do process-wise is just go like this. Steady, 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 steady improvement. And that at its essence is what I talk about in the bobblehead concept. If you've not seen that video of mine, it's just right on YouTube. And as one of the commenters are saying, important to know when to take your foot off the gas. Now, here's the key nuance of that. It is important to take your foot off the gas as far as risk allocation and aggressiveness. Now, here's what you never ever want to take your foot off the gas for, is how hard you work to improve. Even in a very slow market, there is an infinite amount of work you can do, literally infinite. To this day, I've been working 15 years, there are still infinite ways for me to improve. And the way to improve is by doing your daily process in the good times and the bad times. How many traders found it very easy to stick to their daily report card in 2025? Probably a lot of them. A lot of them did monthly reviews, a lot of them did daily report cards, and as a result, they improved a lot. Now, here's my question and my challenge. How many traders will stick to a daily report card every single day of the year? How many of them will do a monthly review every month of the year if 2026 is materially slower or more difficult than 2025? And my answer to that question, from observing hundreds and hundreds of traders, I would say 90% of them are unable to stick to that daily process. The ones that do stick to that daily process inevitably end up the best traders in the firm. I have seen this again and again. The people that stick to their process in the good markets and the bad, they end up the literal best traders in the firm because they are constantly growing. And if I look at the traders at S&B Capital that have had massive, massive breakouts, traders like Max, traders like Graham, traders like young Stephen Hajar, they are doing so well because in the difficult markets and in the slower months, they are still improving. They are still working and they are attacking the job with the same ferocity to improve. And you might not see evidence of that improvement in the slow market, but just because you're not seeing the evidence doesn't mean you're not improving. And the analogy I gave recently is physical therapy. If you injure yourself, physical therapy is actually highly effective. The literature shows it to be highly effective. The reason why physical therapy in practice for most people is not that effective isn't because it doesn't work. It's because people don't follow the exercises and the program and the process long enough and consistently enough. And you need to pass this period of latent, what James Clear calls like the period of latent energy or something like that, where you're applying heat to the pot of water, but you're not seeing the bubbles. And most people, if they're not seeing the bubbles, they don't sustain it. And so like, it's such a powerful visualization. Like whenever you're working really, really hard and you are frustrated with yourself, the reason why you're frustrated despite working really hard is one reason, because you are not seeing the bubbles. You are not tangibly and objectively seeing the process. And as a trader, that can be frustrating and tough. And that can be what really demoralizes most people. And when you get demoralized, that's when you stop making progress. And so, look, I don't know what 2026 is going to hold. In fact, nobody does. And if someone's going to tell you it's a good year, it's a bad year, they have no clue. I really don't know. But what I would urge you to do is reflect on this lesson and reflect that, like Bella said, we're going to be caught up in this cycle. For every 10 years, 2 will be good, 4 will be shitty, and 4 will be average. And what you really need to do is make sure that no matter what that market's doing, you are just applying that steady work. Okay, Other question, is the Shark podcast coming soon? Yes, I need to check my release calendar, but I believe the Shark podcast is coming next week. So that's actually a great segue for me to say, look, everyone, I take time out of my Sunday. If you enjoy these streams, please hit the subscribe button. I'm trying to grow my YouTube channel. Why? Because there is so much bullshit out there. There are traders on YouTube with hundreds of thousands of followers that ultimately are total bullshit. And they are spreading bullshit, and I want to be the voice of reason, the voice of credibility, the voice of trust in the community of traders. So hit that follow button, share the stream with your friends, and I will keep on doing good work. Okay, let me take a couple more questions. My voice is a little gone from all the football this weekend. Had an amazing... So here's another thing I'll say. So last night, I'm in LA seeing my buddy compete in a powerlifting competition, and... last night, I did a trader meetup in Los Angeles. I even opened it up to anybody that was willing to donate to a nonprofit. And people from around the LA area all ended up showing up. And people are attacking this game from all walks of life. We had software architects. We had full-time traders. We had part-time traders. We had one trader that has been trading since 1999. And there's one universal truth I would say in trading is that the game does not get easy and that you need to take this game as a professional. And actually, so one thing I would say that came up in another script I was doing, the more you can treat trading like a professional, the better. And I would ask yourself, let's say you knew that trading was going to pay you $500,000 this year. Give you the salary of like a surgeon. Let's say you were going to make a surgeon salary, $500,000 this year. If you knew that were to be true, how would you treat this job? How would you show up to this job every single day? What level of professionalism would you give it if you knew that if you treated this the same level of professionalism as a surgeon treats his job, you would make the same amount of money? Would you show up on time? Would you keep a daily routine? Would you work long hours? Would you get dressed for work? As one commenter just said, would you have surgical entries and exits? Would you treat every day and every trade as if it was a matter of life and death? How routinely and strictly would you follow your checklists and your daily process? In hospitals, not that I'm an expert on this, but they have very strict processes. They have very strict safeguards. They have accountability partners. They have nurses, and they have software, and they have systems to make sure that they do not make a mistake. So if you were to attack this job with the same level of professionalism, now think about this. Most doctors, most surgeons, they probably went through 7 years of tuition, medical school, residency. They were paying money and not getting paid shit. What if we viewed the analogy of a surgeon and the tuition they paid over time to eventually make money? What if we viewed that the same as the tuition we must pay as a trader? And sometimes it does take 3 years, 5 years, 7 years of tuition. But if we took that same professionalism, showing up every single day, working the long hours, following our daily checklist, following our process, every single day, doing that daily report card. There are some commenters asking, how do I implement the playbook? How do I do the daily report card? I already have videos on that, so check them out. I have a lot of content already on this YouTube, 100% free. But back to this surgeon analogy, so many people, if they treated the job with the same level of professionalism that a surgeon does theirs, the progress they would see would be unbelievable. And to even further this analogy one last bit, when I started at Trillium, I was making $26,000. That was my salary. $26,000 in the New York City area is not enough money to live, you can imagine. So every single Sunday, I would go to work. And when I went to work on Sundays, I was not making more money. They did not pay me by the hour. But what I would tell myself in my head is, Lance, you're actually getting paid $200 an hour or $250 or $500 an hour. And I knew that even though I wasn't seeing the dollars in my pocket, the hours I was putting in every Sunday, that was future income I was going to get paid in year 3 and year 5 and year 10. And so when I was doing those Sunday sessions, the truth is that actually was earning me money. I couldn't see it. I couldn't see the bubbles in the boiling pot, boiling, But I knew internally that I was improving myself and that over time, me putting those hours was going to make me big money. Now, if I look back, like how much was my actual hourly rate trading? It would be something absolutely asininely high. But at the moment, when I was investing in my future, much like those surgeons in medical school, when you're in medical school, what's your hourly rate? -$50 an hour? Something absolutely absurd. Like you're probably paying $100 an hour in medical school. And that's the way we need to treat trading. We are paying a tuition upfront of money and time investment with the hope that this will lead to a greater investment and return on that investment over time. But we need that professionalism. We need that work ethic. We need to take every single day with intention and make the most of it. And that's a lesson I want to impart with you. I will take one more question. My voice is very much gone. Let me see if there's anyone good. For indicators, so for all the folks that are probably new to the stream, first of all, please subscribe, but then check out the YouTube videos I have. I have a whole playlist on indicators, so I address a lot of these. A lot of the questions people ask, I already have really, really good content on. Let's see. Let me do one final question. So one quick question, will I be having an Orlando or Miami meetup this year? For Traders for a Cause, So first of all, let me pitch Traders for a Cause, which is a nonprofit I'm on the board of. Traders for a Cause raises money for charity and helps educate and connect traders. Traders for a Cause is how I first got involved in 2019, and that's how I met my whole network of retail traders. Some of the best retail traders in the world show up at this conference. It is an amazing event. I've been going for 6 years now. Highly recommend if you are looking for a network, if you're looking to learn from really good speeches, and just frankly, have a lot of fun. So I will be doing a magnum opus meetup for Traders for a Cause in Miami. One day I'll do a meetup in London, inevitably. So what else can I answer? Okay, so here, this is a great question. Just because, John the Don feels the need to spam a million times, let me just hide this user for now. Okay, there we go. So John the Don was spamming, okay, Lance, if you've made so much money, why do you need to, sell a trading course? So let me address that. So I don't need to sell a trading course. I don't need to do anything. I've been able to retire probably since I was 30 years old. At least financially, I literally did not need to do a single thing since age 30, which is kind of crazy. The truth is, most people don't actually want to retire. Most people still want to do something awesome. Most people that make that type of money are ambitious and driven. And that is me. And so, as I've said, I did a whole video on this. So the trading course raises money for charity. Every single dime I've ever made from that trading course has gone to charity. That whole thing started from my Patreon. My Patreon, which is what gave me the idea to do the course, was literally videos. I did one video a month. I literally did one video a month on my Patreon, and I shared some really good slide decks and stuff. And what ended up happening is we raised $100,000 for charity. $100,000 so I run my own nonprofit. $100,000 for charity goes so insanely far. You guys cannot imagine the impact $100,000 makes. Like, if you guys run the data on this, you can literally save a life for a couple $1,000s. So even if we take the high end and say it's $5,000, you can save 20 lives for $100,000 with charities like Life You Can Save. So what's so amazing is for me making a couple videos per month, it didn't all go to Life You Can Save. I did a huge amount that went to the Fred Hutch Cancer Center. So the Fred Hutch Cancer Center has probably been one of my biggest beneficiaries ever. The two big beneficiaries, Life You Can Save, which literally just saves lives, and Fred Hutch Cancer Center. And so that's what gave me the idea of making the course. So me making the course, it's like, rather than me doing one shitty video a month, it was like, let me do this properly. And so I spent 2 years and a shit ton of money to make the course. Like, I would genuinely ballpark the cost of that course at over $500,000. You know, and like me making the course isn't a charity, it's to raise money for charity. So do I need more money? Absolutely not. Most of my wealth will already go to charity. I will never spend the amount I have. People that know me personally, you know that I do not drive a Lamborghini. I do not live in a $20 million home. I do not have a yacht, and I have no interest in ever having those things. And so I do this stuff because I enjoy it, because I have a skill set. I like sharing it. I like helping people. I get a lot of enjoyment, and a lot of people find benefit in this. So I don't find anything wrong with selling a course, and I do believe in the product. And I also just love doing this content and the people I meet and the people I get to work with. So that's why I do this. And, you know, a lot of people benefit. And so I love it. Maybe one day I'll grow bored and I'll just move on to other hobbies and other interests. And that's great. But for now, you know, that's what I do. And look, if you want to see some of the charity work my own charity does, I run this nonprofit called the Impact Competition, which I'll type into the chat. Check out and follow Impact Competition on Twitter, on Instagram, or if you even want to join some of these impact competitions, like what we do is we host these events at local universities, some of the best universities in the country, and we get students inspired to solve local social issues. So we're at University of Chicago, we're at Cornell, we're at Indiana University, we're at University of Houston, we're at Penn State. And I would say over the course of 1 year, we probably touch the lives of over 500 students and make them think about the world around them and learn about giving back and gratitude and that they can make a difference. And so if I were to end this in one message, it would be that, like, look, I want you all to have a huge amount of success in 2026. That's the truth. The more people that succeed, it's not a zero-sum world. You know, I want everybody to succeed. We can all lift each other up, and I get that not everyone will want to donate, but my challenge as well to you all this year, can we make a bigger impact than 2025? Can you be kinder to your friends and family? Can you be kinder to strangers? Especially as the world gets so polarized, can we better understand other people's opinions? If you are a Democrat, I believe your experience and I want to hear your opinion. If you're a Republican, I believe your experience and I want to hear your opinion. I want everybody of every race, every background, every experience to be healthy and happy. Here's why. Because if everybody's healthy and happy, then I'm safer, I'm healthier, I'm happier. And so even if it's just helping other people in our community be happier, even if it's just helping our friends, even if it's helping whoever, it all adds up. And so the bigger part of why I do this, not just to raise the money, is to also raise awareness. I try and be the best person I can be, and I try and better my friends and family. And so all I do is send love out there, make the trading community a better place. If you all can help me on that journey, that would be amazing. And so thank you all so much for spending your Sunday with me. Sorry for going on a lot of rants, but I appreciate it. And I'll keep on doing these as schedule permits, and I'll keep on sharing awesome YouTube videos. So give me a follow and let's kick ass this year. And like I said, apply your process the whole way through. We don't know what the year holds. Let's work hard. Let's make the most of it. And I'll see you all in the next one. Thank you, my friends. Wishing you the best.